The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome everybody to another episode of the First Fruit Stock Club. Let's go. Yes. Hope everyone is having a great week. I'm here every Wednesday at 10 o'clock. If you don't know who I am, my name is Donald Green, just like the hat says. I am the founder of the First Fruit Stock Club. I come here every week to talk about stocks. Man, to talk about stocks, the stock market, and man, how can you make money in the stock market? We all need to make more money today, right? We have to make more money. So the stock market is my vehicle of choice. And if you guys have interest in the stock market, this is the show for you. So why do people come to the show and watch the show? If usually people will watch us or people will join the club because one, they're a trader and they had inconsistent results, and you want a consistent profit out of the stock market. I help traders who do that. Also, if you've been looking for something to generate extra income, you don't have a lot of time, you're a professional, and you want to spend a lot of time, but you do want extra income. You want to make, something that is very beneficial or significant to what you already make. The stock market is it. I help professionals do that also. So that's why we're here today. So man, it's a lot going on in the stock market. I'm gonna get to the market. First and foremost, before I get into the details of it, man, please like, subscribe, and share this show. Like, subscribe, and share the show. I'm trying to grow my audience. So please tell somebody and tell somebody else and somebody tell somebody else about the show. And disclaimer, right? First Fruits information provided in the First Fruits Stock Club podcast is for education and informational purposes only and should not be considered financial, investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution, regulatory authority. Investing in stocks and other securities carries risk, including the potential of loss. Principal, past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any financial decisions. The First Fruit Stock Club is an affiliate. Do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. Let's go. All right, so look. Let's go. So before I get into details about the show, in my headline and subline, I said the Ravens are going to the Super Bowl this year. And yeah. I don't care who your team is. The Ravens are going to the Super Bowl. And if you got a problem with that, see me in the comments. But I believe, man, I had an opportunity to go to the Ravens Stadium for the first preseason game. That's right, Baltimore Ravens. To the first preseason game, my son and I, man, I was very, very impressed with the new rookie tackle. I think he needs to work on maybe some technique staying lower. But man, he was aggressive, and he reminds me of Marshall Yonder. I don't understand sometimes. Ravens are great drafters, but I don't understand why do we take this long to go after a guard. Like we had a great All-Pro guard, Marshall Yonder, who decided to retire. God, which year? And all of a sudden, he left and we never tried to replace him, right? The guard have been pretty much average, um, and we wait to this long, especially having one of the greatest, one of the greatest quarterback and mobile quarterbacks in NFL history. And now we have one of the greatest running backs. We've had one of the greatest running backs in history. And when Lamar started out, when we started running Lamar's offense, they they were a running team, but Marshall Yonder was heading up that offensive line. Like he was giving people the business. They and not only and I'm saying there's other defensive linemen across the league. So I don't understand why do we wait so long to replace a Marshall Yonder? And we've had opportunities to either get somebody in free agency. I don't get it, but I'm looking forward to. But the real reason why I think the Ravens are going to the Super Bowl this year is I believe the defense is back. Right, the defense is back this year. Man, they look. And I love it. When I was playing football. Is everybody getting to the ball? Everybody was getting to the ball, and it wasn't a lot of mistakes in the game. That's what I love. It seemed like the discipline towards the end, and I know everyone isn't a John Harbaugh fan, and I thought that he really needed to, it was his time. Everybody needs to find somewhere to go and renew themselves. And he went to the Giants, which, but I appreciate him getting us to the playoffs and what he's done for this organization. But I'm glad it's time to get to move on. Sometimes you need a new message. So, and the Mint, right? And I'm calling it the Mint, and 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 he's here to refresh the team. And I think that we'll be refreshed. That defense look refreshed. They look focused. Man, they didn't make a lot of mistakes. Even the offense, the layoff game. There's things that have been happening over and over again, and we'll see. The only thing I think we're going to miss is probably John Harbaugh's his background in special teams, right? But I can't say that because we had also, we had the rookie, and he didn't have the best year, but I think that that may give us some problems. But we'll see. He's still what is on his second year, and will turns out. Replacing Justin Tucker, and all the other kickers, phenomenal kickers we've had, is a tall task. But I think that's the only area that we're going to have trouble in. I was looking forward to the young guys, really getting to, and I'm gonna get to stocks in a second. Was really looking for the young guys to really for the pass rush, and I was surprised not to see the pass rush. And they basically got to the quarterback for blitzing, but I didn't see anybody like one on one beat their the man in front of them and get into the quarterback, beating the O lineman and get into the quarterback. But we have some ends this year, and our tackle is coming back. So we'll see. I think it's going to be a great year for the Ravens, right? I think it's going to be a great year for the Ravens. All right. So look, let's get into stocks. Yeah, that'll be my new segment. I'm going to talk about football, man. Football is back. I'm so excited, and I'm going to talk about football in the beginning of the show. And if you got problems and you don't think the Ravens going to do anything, hey, say your piece. But we'll see. I'm coming on every week, and we're going to talk about football and what's going on for a second. All right, so look, get into the markets, man. My goal every week I come on here and every month is to help investors, right? Get to the $10,000. Still didn't change it. Oh, I did change it. I'm sorry, $10,000 in August, and we want to do that by passively, and not to work too hard. And is we want to earn $3,000 to $4,000 in dividends. And everybody in the club has the dividend portfolio that I think that will get them there. And they're working on that, but they are getting monthly and weekly dividends in the club. you have to, in regards to having a dividend portfolio, you have to know when to buy them and also which ones to buy. All right, it's real important. So that's real important. So $3,000 to $4,000 in dividends, 5,000 in long term trading. It's been a very shaky market, even though the market's been up. A lot of the technology or the momentum stocks that had been, moving the market are not really moving as much. There's a few, but I don't trust the rallies. And I'm gonna discuss why. But one of the focus is of this show is defensive trading, and I'm a little defensive right now. We're going into one of the probably most volatile times in the market is September, and I believe that we're going to face some issues in September. All right, discuss that. And also $2,000 in long-term gains. We always have to have the basis for everything. And the percentage, I tell everybody the long-term portfolio should be your largest portfolio. The trading and the dividends should complement your long-term portfolio. Long-term wealth is important where you don't have, you can invest for forever. The dividend portfolio, yes, you can invest for forever, but the dividend portfolio may not grow like your long-term portfolio. Man, I was watching something online. And they did and maybe I'll talk about this next week. They did the return of Monster Energy, and it was like a $10,000 investment. Monster Energy at his IPO now worth $14 million. $10,000 invested in Monster Energy would now today be worth $14 million. That is crazy. That is the power of compounding over time. That is the power of having a long-term portfolio, right? Get into, Tesla has some numbers like that. Apple has also some numbers like being like $10,000 invested would be like $12 million. I mean, it's crazy. And what happens is over time, stocks grow, the companies grow, and as the companies grow, their margins expand, their profits grow, they get more customers, they expand their product base, and guess what? The stock continues to go up, and then it splits, then it goes some more. You got more shares, right? As it's going up at higher prices, and it splits again. So it does this over and over again. And as we talk about this in the club about the process of how stocks really grow, and over time you end up um, owning a lot more shares at a higher price, and that's how you can get to that $1 million in regards to as a shareholder, and that's to be the goal, right? If we can hold it long enough, and a lot of times, it's like I know, well, you have to hold it forever. A lot of times, it's not forever. It's like if you put in that initial $10,000, but we didn't get into what if every time because the stocks were volatile. What if every time it went down, you added another 1,000, right? Then you can cut that time frame down, right? So finding the right stocks, developing a long-term portfolio, and the dividend portfolio allows you to have a lifestyle, right? Everybody was thinking investing in stocks like, man, stocks going to take forever. I need money now. A dividend portfolio, right, can help you get, in the club, I say we get to 500, 500 to 1,000, 1,000 to 1,500, right? 1,500 to 3,000, then 3,000. Then after that, it can go as far as you want. And you can develop the dividend portfolio. And we do that by using options, right? And options is like one of the vehicles that we use to expand our capital base. Because everything is, when we're investing, is off of capital, it's off of money. And one thing I talk about is, earning money uh, in this economy and in the world. Either you're earning money on labor, right? You earn money on debt, which is, you invest in real estate. You're earning money on other people's labor. If you own a business, or on intellectual property that you may have, or and the last is earning money on investment capital. That's money, earning money on money. and earning money on money, you don't have to deal with the problems that you have to when you have to work with other people, right? And that allows your investments to grow. So I always believe that you need to have a portion of your investments earning money on money, and developing a dividend portfolio that pays you on a weekly basis and on a monthly basis is always a plus. All right, so look, in order for us to hit these goals, man, we have to map the market, right? Got to map the market, and basically mapping the market is basically, man, we need to where our goal is that is really two main market structures in the market. I like to call market structure. There's a time when risk is on, where people are buying stocks and the stock market is moving up, and then there's a time where risk is off, right? And so risk is on, that means we're hitting higher highs and higher lows, right? But if risk is off and people are selling, that means we're hitting lower lows and lower highs, right? We're always watching out for what's going on, right? So those are the, and really that's based on the four market behaviors. I call it market behaviors, right? The behavioral market structure, and then what happens when the market structures break down. Like when you're in a trade, right, and you're trading in the stock market, and you looked at all the technicals, you have a good stock, and what happens is the stock just starts out good. You'll have options. You'll start out, I believe in buying discounted options, out of money options, and you'll buy it out of the money and it'll start out positive. You buy a contract, the contract starts out 5%. Then all of a sudden, it goes from that to going negative on you, right? But usually, from my experience, that the stocks will usually go negative from the beginning, like early on. And usually, if it's going to be a positive, I didn't bring my water. I ain't thirsty. But if the trade is going to be a positive trade, it will usually, man, perform in the beginning. But I have had lots of trades that didn't perform in the beginning, but you hold it, and therefore recall, which is buying time. Excuse me, you buy time, and you let the option, letting the play pan out. That's where you hope the market may go from risk off, right? If the stock goes negative, to risk on, where people start buying the contract, the stock starts moving up, and therefore we can now be able to take profit. And that's our goal. We are always navigating the market. We're trying to get to risk on and being able to close out an option, and that's how you generate that $5,000 plus, in the market. What I like, and I buy options in the club. I'm buying options under $1,000. All right, I have traded in some more expensive, but finding options under $1,000, and once we exit, we can then take the 1,000 and buy more dividends, or we can add to that long-term portfolio, right, in the future, that we have just sitting there. And what happens is, of course, the stories. $10,000 invested and Monster Energy turns into 14 million. But the thing is getting that $10,000, right? Getting that $10,000, and it's hard to save $10,000. Well, if you have a portfolio that's going to generate a few $1,000s a month, it doesn't become hard, right? It's not as hard, right? Because then you can just, the more dividends you have coming in, it can maybe take you, say, if you have $10,000 coming in dividends. Hey, well, it takes you 1 month, and you see a trade, a stock you like, take 1 month and you're putting it there. Or you take 1 month and put it in to the option portfolio to grow it. But one of the things that's really breaking down the market right now, let's talk about being defensive, right? And um, when the market breaks down, the support kind of leaves the market, right? Support, meaning the the stock market bouncing off technicals and supports. I like double bottoms is a support, and the people who are willing to put their money there, right? You have to have support in the market for the market to reach new highs, or if it's gone down, right, to go back to where it's gone to. So these are the different things, the problems that we're having right now. So is really the communication and the market. Communication can break down market structure, right? Communication can break down market structure, and you see the communication all the time. Communication determines the what I always say. The communication determines the environment, right? Rather, the communication is positive, and people can look forward, and people become optimistic, or traders and market participants can become negative according to the information that they have and the communication that's being disseminated throughout the market. And right now, the communication is not as positive, and the market has been very, very choppy, right? And I believe, look, if you can't, I mean, I do have two trades, a trade in Apple now, and what I'm going to tell you, and I'm going to discuss that in a second, but also another trade that I'm going to put in. So let's talk about why defensive, right? These are the market roadblocks, right? And that's what I talk about as we map the market. There are roadblocks that we have to look out for so we can get the profit. The wars continue going on. I think this war is. I don't know if I don't know if they're ever going to come to an agreement again. Because of the war, we have interest rates because of the price of oil, right? And man, another one that no one's talking about is Nvidia's reporting next Wednesday. So when I come on next Wednesday, I will show um, what Nvidia reported. Understand, we are in the AI era, and Nvidia is like, of course, the largest company in the world, but also started the ability for machines to move at the speed they need to for AI to really take hold on the market, and all these companies that come about. They develop the chips, and but it's not going to matter what they say. As of this time, it has not been enough, and I don't know if that's going to change by next Wednesday. But the market has been, I mean, the stock has been moving up, but I kind of hate that for a stock to move up. So all the good news is already baked into the stock. And so whatever news we may get, the stock may fall. Nvidia is the largest position I have, and also largest position in the club. It's not the stock Nvidia of old. You're not going to probably get 200%. But when you have the largest company in the world, it's important that you own that stock, right? And is the company is still growing, but people don't believe the growth rate and believe, but the companies, according to was it price to sales, selling for cheap compared to some of the other companies. But it's not going to matter. Remember, it's always the communication in the market. It turns either, the communication can make the market participants become negative on a stock or positive, and it's the communication is not going to be enough. All right, for Nvidia to sustain itself. The wars is never ending, and interest rates, right? Man, I didn't put that up. Interest rate, the 30-year has hit one of its highest levels since I think 2004, over 5%. And some people say the interest rates are going higher. I believe that this is going to disrupt the market. It already has, and we've had some negative. But where it is right now, we'll see if it stays there. It's just like a stock. It's hit the highest level, and is it going to stay there and move up, or is it going to bounce off the high and move down, and we're going to have a lower? Interest rates can, definitely the market, and my whole view of the market is like the war is the main thing, right? And the negative communication is really about the war, and the cost of oil around the world is also increasing the interest rates. You know, around the world, people are asking for higher rates on their treasuries. So we'll see how that matters, but that's the market, and that's really what's going on that's driving. What I like to do is, man, I always like to look at the SPY, SP 500. This is an ETF. They basically track the SP 500, and we hit a high of 777. I love that number, and I believe the SPY, the SP 500, will end the year at higher. I think we may hit 800 on the SPY, or even 8,000 for the S500 index. I think that, that's definitely, I think that's where we're going to end up. So, but I think um, we're going to go through a few some volatility. And one of the things I think is going to happen is that in September, I think we're going to have a spike in oil prices. Interest rates are going to increase more, and I think the report in Nvidia, it may give the market a short term boost, but I don't think it's going to be enough, and I think it's going to drive stocks down. And those are three things that the reason why I'm talking about being defensive right now, and why it's important to have a defensive market and defensive mindset. So, what do we need to be defensive? So, let me give you a few different things. The signs, it's time to get defensive. Protecting gains, right? Um, the market's been up. I mean, you've had an opportunity to have some gains. I've One of the major positions that we have in the market right now, I decided to cut that down and take profits on it. Probably should have took profits in July, but I didn't. I didn't pull the trigger fast enough. But we're back up again. So I decided to take a nice little chunk of profits and put that to the side. Also, if you have some stocks that just have been running, you may need what's called rebalance your portfolio, right? You have some stocks that have been running, and I believe in letting stocks run. As you see, investing $10,000, but sometimes you can take a little portion and reallocate the portfolio and allow yourself to have a little gunpowder, right? When the market turns down, and maybe looking at adding some more stocks. All right. I don't Some people like to use stop losses. I don't like to use stop losses. I think stop losses give so people are able to see other traders are able to see orders. And I don't want other traders to see I mean, not saying that I'm trading on huge amounts, but I don't want other traders to see what my orders are. I want to decide what's my level, and I don't want to let them know what my level is and what my pain threshold is. So I don't use stop losses. Some people do, but I watch my position, and position gets below my threshold. I especially for options, I cut it, I sell it. Right now, it's like 20%. Apple went below that, my trade in Apple, but it's come back to now it's positive. And I added to Apple. I felt like, it's a solid stock. It's not the volatility on Apple's. You're not gonna get a huge spike in volatility. Um, so I believe that I could hold it and hold out, even though the stock when I bought it went down like 30. It was down like 30% for a while, but it's come back. So I don't believe in stop losses. But if you like to use stop losses, you can. And I talked about this cutting a position. You got to have an amount that you're going to cut a position. If you feel like that, I said 20%, but you should have a percentage in your mind, right? 20%, 30%, to still have, you can sell it and still get 70% of your money back. And guess what? Wait for a better opportune time. 'Cause you might have a great idea, but your timing is off. That happens all the time. So deciding to reinvest, deciding to take to cut your position, that never hurts. It's always a better time. Or if it's positive, maybe cutting a little early. I know you wanted 50 to 100, but maybe you cut it at a 30% gain. I'm just not going to invest in the market right now for a 30% gain. I'd rather wait till the market conditions change. The market is really choppy, indecisive. The communication has not changed. And when I find that position in the market where I feel that the communication is changing and the prices are where I want, then I'm going to look at doing some more trades. But I believe that oil is going up in next month, September, or leading up to September. I believe oil will be a good trade. I'm going to put that in the club. I think I went up 110% on oil in September. And I think I might put another trade in September. I see that coming, which I have no control over. I'm just a trader and a market participant. But just the way things are, I think oil is going to be a problem. Man, I thank you guys for coming and man, invest in the market. It's important to get into the market. It's always an opportunity. You're in the greatest stock market in the world. Prices are high. You need to have a side income. You need to put money away to outpace inflation. If inflation is not going anywhere, it's going to take you double of what you make today to have the same lifestyle in the next few years. You need to become an investor. You need to invest your money. And don't do it by yourself. You can do it by yourself. But I always say get into a group or a community, whether it's me or somebody else, and invest and take it upon yourself to invest. We've done well. I've had some failures like anybody, but having dividends come in to replace that, that is a plus. What I teach as a boom, dividends to use in your daily life to help supplement your income. So, man, thank you guys for giving me a few moments of your time. And I just believe that the stock market is the greatest. You're looking for to increase your income is the greatest opportunity in the world. I love real estate, but everybody real estate has capex. I know you heard that word capex, meaning you're gonna have to spend more money. With real estate, you always need repairs. With a business, you always got to reinvest. My dividends are net, right? When I sell an option, it's net. Whatever I make, it's mine to keep. I don't have to give to anybody else. But I do believe and that in your gains and in your dividends, 10% you should be giving away, right? And one thing I have the basis of our club is called First Fruits. I believe that you can beat this economy, right? You can beat it if the first decision you make when you get your check is one, right? These become the top of your budget if you have a budget. All right, one is to give a portion of it away to a charity. I like the number 10%. Second one is to invest it, put it in a brokerage account, develop the account. And what happens is over time, like I said, if you use my strategy, join a club, it will allow you to replace your salary. All right, that's my time. Thank you guys so much. And God willing, I hope I see you next week. And I say, be fruitful. Until next time, I'm Donald Green, the founder of the First Fruit Stock Club. Bye-bye.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.